Low float and heavily shorted SGBX is not expected to print higher prices in the next couple of days. Okay, underlying trend is severely bearish, but in the midst of the bearish extrapolations, there are upper projections which are ambitious: 6.19, 7.86, $8.9. Underlying trend, you can see here, severely bearish. Lower prices, at least up till the 5th of December, are expected to keep printing. On its let's see, on its day, on its 4 hour chart, we're looking at something a bit different. Okay, it has, as a matter of fact, it has, the trend is still very much, in the very short term, since the very short time, like really, really short time, from the 11th of November, the trend is actually bullish, but it doesn't mean anything. It doesn't mean we're not going to eat. We can't deal with. I mean, it's gone now. That that expansion has fizzled out. But in any case, the extrapolation on this 4 hour chart is saying that it's still going to maintain that trend even with the contraction that has played out. You can see here the extrapolation is saying that it's going to, continue to consolidate with a bullish bias. Okay, projections are currently saying, let's see what we have, 6.13 and 5.80. Yeah, it had a run. It had a run as of the from the 17th Monday. Yeah, this past week. Yeah, it had a run up till and reached the highs of 6.66, and then it has gone into a contraction now. Yes, on Thursday the 20th, you can see here they tried to pump it up again. They tried to run the squeeze again, but it didn't work. So there were three pauses. It was paused thrice. Yeah, it was paused thrice. Yeah, okay, it didn't work. First, like half hour, like first one occurred at half an hour into the session, and then the other ones just about 2 hours to the close of the session on that day. Yeah, heavily shorted, and low float is extremely, extremely low, extremely low. Let's find out more about what's going on.
There's a lot of speculation and mixed sentiment around SGBX, Safe and Green Holdings, right now. Here's a breakdown of where things stand, what traders are saying, what the risks are, and how sentiment is evolving. Current sentiment on SGBX. Short squeeze narrative still dominant. Many retail traders firmly believe SGBX remains a prime short squeeze candidate. According to community posts, float is very small. Short interest is perceived to be much higher than official 27% of float figures suggest, and the cost to borrow is sky high. One popular thesis, although the reported short interest might say 25 to 27%, in reality, because of locked diluted shares, the real short pressure could be 200 to 1000% of the tradable float. High borrow rates are regularly cited. Some traders mention 430 to 500 plus percent cost to borrow. On the squeeze cycle, some users argue SGBX is in stage 2, early liftoff, meaning forced short covering is starting, but it's not yet fully trapped. Company taking action, or at least signaling it. Safe and Green has engaged Share Intel to investigate potentially illegal trading activity, naked short selling, and possible market manipulation. They're considering regulatory or legal action, including potentially working with the SEC whistleblower program. On dilution concerns, the company restructured its private placement deal with DB Boral Capital, removing warrants that would have caused a 70% dilution. It also regained NASDAQ compliance, minimum bid rule, after some corporate actions. Financial risks are very real. From a fundamental standpoint, 2024 results were poor. Revenue dropped sharply, and losses remain large. According to public stats, the float is tiny. According to one source, float is just 184,630 shares. Their balance sheet is weak, limited cash, significant debt, and negative book equity. Community divided, but optimistic among squeeze players. On Reddit, a number of traders are very bullish on the mechanics of a squeeze, even if they acknowledge the business is weak. Others are more cautious, pointing out that while the squeeze setup is mechanically favorable, It's still extremely risky because real liquidity is thin and weird market structure could play tricks. Some believe the recent pullbacks don't invalidate the squeeze thesis. The chart moved, the mechanics did not. There's a growing belief that shorts are recycling the same shares, i.e., they're not covering, just churning, adding to the risk reward for squeeze hunters. Doubts and warnings. Despite the hype, some note that fundamental performance, revenues, cash is weak, which means if a squeeze fails, downside risk isn't trivial.